Welcome back to the Deep Dive. Ready to explore something new? Today we're going deep into the world of the Ethiopian Securities Exchange.
A little different from our usual, right?
Totally. We're talking about the Rulebook, still in draft form. That's going to shape how a whole country invests.
The DNA of a brand new financial market.
Exactly. We've got excerpts from the draft. Ethiopian Securities Exchange Rulebook, volumes A through E.
Will be your guide through the jargon.
So first things first, this Rulebook is serious business.
It's the law of the ESX, no two ways about it.
Right off the bat, it makes that clear.
But it's more than just setting rules, it's about transparency, stability.
Which is what investors want to see.
Precisely. Now let's talk about those who want in on this new market, the trading members.
They've got to meet some pretty tough requirements.
Oh, absolutely. We're not talking about your average day trader.
You need the licenses, the experience, the financial history, the whole shebang.
It's a serious vetting process. They're looking for any red flags.
Making sure only the best make it through.
And once they're in, that's where the compliance officer steps in.
The guardians of good behavior.
Think of them as the ethical backbone, making sure everyone's playing by the rules.
And the rulebook goes above and beyond to protect them.
Exactly. It anticipates pushback, protects those who speak up.
Speaking truth to power can be risky, so that's a strong message.
It shows a commitment to accountability.
Now, from the rule enforcers to the heart of it all, the market makers.
These are the ones ensuring there's always someone to buy or sell, keeping things moving.
The essential lubricant for a smooth-running market.
Precisely. And here's something interesting. The rulebook says if they have to stop trading a security, they can't just disappear.
They have to make a public announcement.
Transparency, again, building confidence for investors.
I like it. So, what about when things go wrong? Tell me about this Capital Market Compensation Fund.
The CCF, think of it as an insurance policy for investors, there in case a trading member can't meet their obligations.
So if a trading member goes belly up...
The CCF can step in to compensate investors.
But it's not a free ride, is it?
Not at all. There are rules about who can claim, how much, the whole 9 yards.
The ESX is making it clear they'll be keeping a close eye on things.
It's a safety net, not a blank check.
Makes sense. So let's say a company wants to be listed on the ESX. Big dreams.
There's the main board for the big players and the growth board for the up-and-comers.
Naturally, different strokes for different folks.
Exactly. The main board has stricter requirements. We're talking years of operating history, minimum capitalization, the works.
High stakes, high bar.
Right. But for those not quite there yet, there's the growth board. It's about nurturing potential.
Still, they don't just let anyone in, right?
Of course not. They're looking for that track record of growth, that upward trajectory.
So you've made it onto the ESX, congrats. But now you've got to keep your nose clean, especially when it comes to those, shall we say, family and friends deals.
Yes. Related party transactions ripe for conflicts of interest.
But the rulebook's got this covered.
It's all about transparency, full disclosure of any deals involving related parties.
No sweeping things under the rug.
Absolutely not. And they've gone a step further. Issuers need an independent opinion on whether a deal is fair.
Talk about checks and balances.
It's about safeguarding minority shareholders.
Love it. So with all these rules, what happens if someone tries to bend them? Does the ESX have any teeth?
Oh, they do. Fines, suspensions, even public censure.
Public censure, now that's gotta hurt.
It's a big deal, especially in a new market where reputation is everything. And it gets better. They have this thing called a compliance status indicator.
Okay, you've piqued my interest. What's that all about?
Think of it like a public warning sign for companies not meeting standards.
A scarlet letter for bad actors.
Precisely. A strong incentive for companies to toe the line.
So it's not just about punishment. It's about fostering a culture of good behavior.
Exactly. And that's crucial for a healthy, trustworthy market.
A healthy market needs those safeguards in place.
Absolutely. And that's what we see in these detailed requirements, especially for those trading members.
We talked about the high bar, but break it down for me.
Well, first off, you need to be licensed by the Ethiopian Capital Market Authority, the ECM.
Serious credentials.
Oh, yeah. And then there's the experience, the expertise, the ability to handle the volume.
Some sense.
And of course, there are rules about handling client funds.
The foundation of trust.
Right. Separate accounts, meticulous records, no funny business.
Transparency is key.
Absolutely. And it doesn't stop there. Ongoing obligations, keeping those standards high.
Like what kind of obligation?
Capital adequacy, for one. Having that financial cushion.
To weather the storms.
Precisely. And regular reporting to the ESX, transparency in action.
Keeping everyone in the loop.
Right. And let's not forget personnel.
Oh, right. It's not just about the company itself.
Nope. They're looking at directors, CEOs, the whole leadership team.
Those compliance officers, too.
Especially them. They're critical, upholding integrity from within.
The linchpins, it sounds like.
Exactly. And the ESX has given them the tools and protection to do their job.
Powerful stuff. Now back to those market makers.
Ah, yes. The conductors of the trading orchestra.
Making sure the music keeps playing.
Exactly. Continuous bid and offer quotations, keeping the market liquid.
Always there, ready to make a deal.
Yes, and if they need to step away for a moment, they have to announce it publicly.
Those sudden disappearances.
Transparency reigns supreme. Now let's dive deeper into that Capital Market Compensation Fund.
The CCF. I'm ready for the nitty-gritty.
So it's funded by the trading members themselves.
A collective safety net.
Exactly. But there are rules for claiming from it, of course.
Not just a handout for anyone who loses money.
Not at all. The ESX will be scrutinizing claims very carefully.
Looking at the investor's role as well.
Precisely. Did they make risky choices? Were they properly diversified?
Due diligence still matters, folks.
Absolutely. The CCF is a last resort, not an excuse for recklessness.
Got it. Now let's talk listing process. A company wants to go public on the ESX. What do they do?
It's quite a journey. Starts with a comprehensive application bearing it all to the ESX.
No hiding allowed.
None whatsoever. Financial history, business plans, governance, it's all on the table.
They're really looking under the hood?
They want to see the engine, the chassis, everything. It's
Yes.
about ensuring quality.
Making sure the companies listed are worthy of investor trust.
Precisely. Now, for the listing methods themselves,
Okay, so how do they actually get listed?
the most common is the IPO, the initial public offering, new shares issued to the public.
The classic route.
Right. But there are others, listing by introduction, for example.
For the more established companies, I'm guessing.
Exactly. They list existing shares, no need for new issuance.
And for those who want a faster track.
There's the reverse merger option, merging with a publicly listed shell company.
A shortcut of sorts.
In a way, but with its own set of regulations, of course.
Of course. So no matter the method, the ESX is keeping a close eye on things.
Absolutely. Transparency and integrity throughout the process.
Now the company is listed, they made it. But it doesn't end there, does it?
Not even close. Ongoing obligations await.
Keeping the ESX in the loop.
Exactly. Financial performance, material changes, related party transactions.
Transparency never sleeps.
And neither does accountability. Annual general meetings, answering to shareholders.
Giving investors a voice.
Precisely. Of course, there's also the possibility of delisting, voluntary or not.
Right. Companies can choose to leave or
Be shown the door if necessary.
if they're not holding up their end of the bargain.
Exactly. Failing to meet obligations, undermining the market.
The ESX can step in.
They will. Listing is a privilege, not a right.
Speaking of which, we focused on stocks, but what about debt securities?
Ah, yes. The Rulebook covers those too.
So if a company wants to issue bonds,
The ESX has rules for that.
and those rules, are they similar to those for equities?
In many ways, yes. But with some unique twists.
Oh.
For instance, with bonds, a trustee needs to be appointed.
To represent the bondholders' interests.
Precisely. Protecting their investments.
Makes sense.
And of course, transparency reigns supreme. Detailed information about the bonds, interest rates, maturity, and so on.
Giving investors the full picture.
Exactly. No surprises, just clear, transparent information.
So from the grand principles to these specific examples, the ESX seems to be covering all its bases.
They are. It's impressive the level of detail in this rulebook.
They're not messing around, are they?
Not at all. They're building a robust, trustworthy market, brick by brick.
And speaking of building, how about those actual trades? What does the rulebook say about that?
It's all done electronically through their automated trading system, the ETP.
No more yelling on the trading floor?
Nope. All digital, all the time. Efficiency, transparency, accessibility.
And speaking of accessibility, I'm guessing mobile trading is on the table.
Absolutely. The rulebook addresses online and mobile platforms specifically,
Keeping up with the times.
while ensuring those platforms meet the same high standards, of course.
Right. Got to maintain that balance between innovation and security.
Exactly. Now, even in a well-regulated market, disputes can happen.
Conflicts are a part of life, sadly.
True. So the ESX has a clear process for handling those.
Lay it on me.
First, there's mediation. A neutral third party tries to find common ground.
Avoiding those lengthy legal battles.
Precisely. But if that fails, there's always arbitration.
with a panel of experts making the final call.
Exactly. Fairness and impartiality are paramount.
It's impressive, the thought that's gone into this rulebook.
They're creating something special here, that's for sure.
It's like they had a blueprint for success, learning from others, and then some.
Yeah. That ambition, that attention to detail, it really shows. They're building trust, attracting investment.
And speaking of trust, that whistleblower protection really stood out to me. It's not just talk, they're walking the walk.
Exactly. It's about nipping problems in the bud, creating a culture of accountability.
Right. And those procedures for handling complaints, ensuring confidentiality, protecting whistleblowers from retaliation, that's huge.
It's about making it safe to do the right thing. They get it.
And that transparency is everywhere, even those monthly account statements. It seems small, but it's a big deal.
Keeps investors informed, no surprises, just clear communication.
Trust, pure and simple, and those strict rules against commingling funds.
Drawing a line in the sand, your money is yours, period.
Building that confidence. And when it comes to actually executing trades, the ESX means business.
Oh, absolutely. Best execution isn't just a suggestion, it's got teeth.
Considering everything, speed, liquidity, market conditions, the whole picture.
It's about the client first, not just a quick buck. And that ties into their stance on market manipulation.
No room for shady tactics here.
They're calling it out, insider trading, spoofing, all of it. The ESX is built on integrity.
And they're not ignoring the future, the digital wave.
Right, those online and mobile platforms, they're embracing them, but with eyes wide open.
Cybersecurity rules, data protection, it's all there.
Innovation, yes, but responsibility comes first. That's the message.
A refreshing one at that. Building something sustainable, that's the key.
Playing the long game, and they're in it to win it, it seems.
This deep dive has been eye-opening. It's not every day you see a new market emerge.
Especially one with this much potential, not just for Ethiopia, but for the whole region.
And it all comes down to this. Transparency, integrity, investor protection. They're setting a new standard.
A testament to good governance, thoughtful regulation, a clear vision. It's inspiring.
As we wrap up, one last thought. The ESX is about to open its doors. What impact do you think this rulebook and what it stands for will have on the future of investing in Africa?
Only time will tell, but the future looks bright. I'm excited to see what they achieve.
Me too. Thanks for joining me on this deep dive into the Ethiopian Securities Exchange. Until next time.